Our next guest says Meta's decision to dump fact-checking is long overdue. Gene Munster is managing partner at Deepwater Asset Management. Gene, great to have you with us. It feels like the pendulum had swung really far to one side. Where is it now with this latest move?
I mean, it's clearly on the right side of the equation, no pun intended. I think it ultimately is just a remarkable chain of events, turn of events for Zuckerberg and the culture of Meta. It does lean left. And I think these recent moves, just speak to his willingness to work with more conservatives. And so I think that he's sending a message really to the world that he's more open to conservatives. Maybe we put those two together, then this nets out at kind of a net neutral type of a platform at this point. I think that's where it nets out.
I mean, Julia made the interesting point about advertisers, and if advertisers feel like their ads are going to appear in a safe sort of environment, then it's not an issue. But if that's different, if it changes with this latest move, then that is going to be a problem. What's your take on that? If everybody is doing this now, if this is sort of the change that everybody is going to make, then isn't that what advertisers have to live with?
Exactly. I mean, you're hitting right the pressure point. That's what advertisers have to live with, is this new dynamic, essentially, of the Wild West on these platforms. But at the end of the day, advertisers care about return on investment. And I think that has been a powerful, they've had this powerful return, and that's what is causing their advertising business to go up close to 20% for the last 6 quarters. And so I don't think that's going away. I think that they will maybe have language around wanting to change, but ultimately advertisers aren't going anywhere. 3.2 billion daily active reach, that is unprecedented. And so I think there is, when I mentioned the pressure point, there's another piece to the engagement, assuming that advertisers stick around, which I believe. There's a nice cost savings here. And Julia pointed out, it's just in the U.S. today. But if you look at the 90 different third parties that Meta works with, they spend somewhere between $2 to $4 billion a year on content moderation mediation. And if you run that through to the bottom line, that adds somewhere between 2 and 5% to Meta's bottom line if they go globally on this. And so this is yet another lever for Zuckerberg to play. It's kind of fallen below the main conversation today, but I think this earnings impact is something investors should welcome.
Thanks for being on, Gene. It's Karen. So you talk about the earnings impact. Do you see any other side to it? Can you quantify what you think might be advertisers pulling away?
Yeah, I think advertisers talk a big talk when it comes to wanting to do the right thing. But at the end of the day, they have to grow their businesses. And again, I think that the return on investment with Meta is impressive. And I think that, again, speaks to what their advertising revenue is. So I don't see advertisers drifting away here. I don't see the platform going into total disarray. And there's another piece to this, too, that advertisers are going to like, which is when you take some of these rails off and allow more of this crowd kind of oversight of the content, it ends up stirring the pot more. And ultimately, when people get stirred up, X has done a great job of this, getting stirred up, get emotional, that increases engagement. And so this is something that's going to be a slow, positive build, but I think that it can improve the engagement.